Hey everyone, welcome to a very important weekly recap and analysis. We'll be diving into what's been happening over the weekend. As we know, there's been a lot of geopolitical tensions happening in the Middle East with lots of escalations that happened over the weekend, and everyone is eager to see how the markets open. When we're looking at markets over here, we can see that markets are currently in defensive positioning mode. Now you're wondering, what does this mean? As we know, last week we had markets more of a cautious optimism until we got more serious escalations going into the weekend. And now markets have shifted to a defensive positioning mode with risk off environment. So if we click the brain over here, you can see that markets remain cautious as geopolitical tensions with Israel and Iran conflict and recent S&P sell-off drive volatility and defense sector rotations, right? So with investors favoring low volatility assets and safe havens amid ongoing uncertainty and negative funds flows, right? So it's a cautious sentiment with preference for lower volatility assets. So we know that there's a risk off environment and it's being caused by the main driver, which is taking up 40%. And it's the Israel-Iran conflict, heightened geopolitical tensions following military strikes, retaliation, and driving market volatility and risk off sentiment. So when we go into capital flows, and here's the bigger breakdown, and these are from Friday with the ETFs, but on market open, we will see energy continue to increase. We will see defense sector see rotations, right? So you can see your utilities, ETFs, your defense stocks like Lockheed Martin, Raytheon, all the Boeing, these will all see inflows, as well as safe havens such as gold. Gold will continue to see inflows as investors flock to gold amid Middle East tensions, right? So this is very important to keep in mind that going into this week, we are looking at the sentiment of investors being risk off caused by Iran-Israel conflict, as well as other factors, but that is the main driving factor, and investors are positioned more defensively. So everybody is waiting, and we do have a few more major events this week, economic events, but the eyes are currently on the escalations and, if any, de-escalations that are looking to happen. So if you actually scroll through the headlines from the weekend, it is all about Iran and Israel being reported. Every few minutes, every 30 seconds, we get a new headline. So let's just go quickly into one of these headlines, like explosion heard over Tel Aviv and Jerusalem. Reuters witnesses reported this. So guys, these are direct headlines from Reuters. So every headline here is reported live. And as you know, that a lot of these institutional platforms have access to Reuters headlines, and that's how institutions stay on top of it. So if we click on this headline over here, click this brain icon, you can quickly see that the impact is primarily due to the escalation of geopolitical tensions. And it means oil prices up, dollar as a safe haven, as well as gold rises during these tensions, and negative impact on ILS. So keep this in mind. You can do this for any headline over here, but just wanted to show you that these are active headlines that are consistently coming in. So now let's jump into the charts, right? So we know that gold is very bullish, and historically, gold always performs when there is FUD. And what does FUD mean? FUD stands for fear, uncertainty, and doubt. And right now we're in that prime moment where there is a lot of fear in the markets, and globally there's a lot of fear, right? And markets are going to digest this as it opens. So we're likely to see gaps opening up on gold heading into 3,400. But we have to be cautious here, 3,500, sorry. We have to be cautious here is that if we see any headlines come in that talks about any optimism, especially from Trump, or any deals being worked out, then we might see short-term outflows on gold, right? But in case we do see that push into 3,500s, then and tensions remain escalated, then you can look to get in on pullbacks and continue buying gold. And one thing I want to remind you is that when gold has its bid, it is unstoppable. During times of fear, uncertainty, and doubt, like down here, October 7th, look at how much gold rallied, right? Over here, this is the Trump trade war tension starting to brew up, and look how much gold rallied, right? So gold, when it has its safe haven bid, it performs really well, right? One thing you want to keep your eyes on is this 3,500 price point. If we're up here and we get optimistic headlines, then you are likely to see outflows happen on gold. But if we continue to break above, keep in mind that short-term optimism can hold weight where you can see outflows of 10, 15, like $15, $20, $30 movements on gold of outflows. And a great example of this is when Russia and Ukraine tensions were going on, right? This is when Russia-Ukraine was going on. We got that mass push towards the upside. We had some short-term optimism down here, which was quickly then absorbed and buyers jumped right back in. So you can see we pushed from 1892 to 1973, over 1,000 pips. And within 2 4-hour candles, we wiped out all the buyers within this range before buyers jump back in. So keep in mind as we head into these price points, but we are likely going to see a large gap towards the upside, maybe going into this price range before we see any correction or continuation. And this is where it's important that you don't start to buy into these highs, because that's where you are chasing, right? You weren't, excuse me, unless you were in this trade from here, you are going to be chasing if you're looking to buy on market open. So wait to see how market digests it, whether there's going to be any optimism today or tomorrow, and then set your week up. And we'll also check out what gold analysis is looking like on market. So over here in major currency pairs, I can click on XEU USD, which is a CFD for gold. And we can see gold reaches highest ever daily close in last Friday, just below 3,500, as the Israel and Iran conflict and anticipation of a dovish Federal Reserve boosts safe haven demand, right? So here's the key levels on gold, and we are right below a key level and above the 34.22 key level. So this is what's currently fueling gold. It's this central bank risk, right? Yes, there's other factors like Fed policy, as we have an FOMC this week, but rates are going to remain unchanged, and markets have already priced that in with a large probability of rates remaining unchanged, right? So it's important that we keep in mind that geopolitical risks are in most focus at the current moment. And of course, we do have Federal Reserve's interest rate decision, and let's click and find out what we have going on. So market AI analysis, market sentiment leans towards a neutral stance with a high probability of unchanged rates, reflecting cautious Fed policy amid inflation and economic stability, right? So the markets are expecting a no change to happen in June with potential cuts later into the year. And we just had inflation tick up as well. And we have risks with energy prices going up, which are inflationary. So this is why the Fed's going to likely hold rates steady, and the markets have already continued to price that in. Going back to now, let's look at US equities. If you have been following along, we called this buy ahead of time when this sell-off was happening, that 4,600 to 4,800 was going to be the low price point that institutions grab their piece of the pie and head towards the upside. And what we can see by just looking at charts is that there's a lot of buy positioning towards the upside of equities, right? So as you know that we are going to see outflows from major tech stocks, S&P sell-off, right? But that is likely going to be short-term. And now we can look into some of the price areas where that short-term outflow can end. It also depends on the timing, such as whether we continue to see escalations, whether US gets dragged in, or there is a false flag that causes the US to come into conflict, which in that case, we will continue to see gold towards the upside and more outflows in equities, right? But here are some of the zones I have mapped out. At 5,700 is a strong liquidity area, which we previously tested as well. We have 5,500. We also have, I would just like to draw this one here about like right there, 5,300, and of course like down here at 5,200, which is a larger demand area, as we had this initial push from 4,800, and then we had buyers jump back in at 5,200. Some optimism from Trump headlines regarding the trade war, which continued to push up into 6,000s, and now we are right at 6,000. So guys, it's important that you understand that we are going to see outflows, but where will those outflows stop in the market? That is completely dependent on whether we see escalations or de-escalations. If we see de-escalations, then we come down to one of these major liquidity zones. There's large chance that we'll continue to see upside, but investors are defensively positioned. This means that they're buying stocks like Lockheed Martin. They're buying stocks like Boeing, Raytheon, and actually a lot of politicians are also and have been doing that. So I can go here, let's search up RTX, Raytheon. So you can see a lot of these Raytheon buys that happened ahead of time. Right down here, you can continue going and you'll see that there are all these politicians, and you can check for anything. LMT, which is Lockheed Martin, purchase May 14th, purchase April 28th, filed May 6th, right? So ahead of time, these people have been buying stocks, and U.S. congressmen, senators, White House officials, they've all been buying defensive stocks. So it really makes you think, how did they know, or did they know something was coming up, right? So these are the headlines that have been coming in, and you can scroll for days where we just see headlines with Trump, with Netanyahu, with Iranian military or IDF, just all commenting where they're launching strikes, if there's recent strikes coming, and everything in between. Looking at what's happening in the markets over here, you can see that we have a Federal Reserve interest rate decision, and it's expected to keep rates steady with a 99.6% probability of a no change currently, right? So rates are going to stay steady with the eyes being on Middle East conflict. And we can even check a deeper dive into, let's see what was happening Saturday in the markets. And right here, you can see that our daily market summary says that global markets are reacting cautiously to diplomatic tensions in Middle East, bolstered after discussions between the UK Prime Minister, Saudi Crown Prince emphasized the need for de-escalation. So this has created a temporary risk-off environment with investors moving towards safe haven assets such as gold. Meanwhile, Japan's proactive trade discussions signal potential regional growth, blah, blah, blah. But here is the main meat and potatoes where you can check what's happening in each section. So geopolitical developments here, key economic events happening, major commodity and currency moves. So as geopolitical tensions rise, expect safe haven currencies such as Japanese yen and gold to strengthen. The de-escalation efforts in Middle East could impact crude oil prices, which remain sensitive to supply chain risks. Forex markets are likely to see higher volatility in short term, owing to a shifting sentiment fueled by both diplomatic and trade-related headlines, right? So you have to keep your eye out when market opens. You have to watch how markets digest the fear that had popped off this weekend and whether or not we get any news of de-escalation. That's why it's very important that you have access to real-time headlines or some news source that isn't articles. And I'm going to reiterate this because articles are delayed. When you see these headlines coming out 2 minutes ago, President Macron of France just spoke this, right? And we got it instantly. Or down here where we have just here, Reuters footage shows projectile missile hitting, right? Or even down here, Iran's armed forces warn Israelis to leave the vicinity. The state TV, and you can keep going. Or if Trump says something, let's look for something that big dog Trump has said, right? So here, 14 hours ago, we can easily get the deal done between Iran and Israel to end this conflict. Trump did say this, we will have peace soon between Israel and Iran, but Trump also said this about Russia and Ukraine. And we all know how that's going. That's still going on. So you have to keep your eyes on objective sources of data, such as headlines, and really see how impact can be determined. And guys, it's as quickly as a click of a button where you can just take one of these headlines, click it, and get the market impact for all of these, for any asset that it's related to. So that's what I'm looking for. I'm looking for continued safe haven demand, given that tensions remain escalated. We're looking to see outflows on US equities. So you can, at that point, start looking for potential, maybe moving your long-term investments around, or like your intraday positions to more defensive positioning and waiting for better prices to jump back in and tensions to de-escalate before you see more tech stocks and the Mag 7s pick back up. But this was a quick recap and summary of what's been going on and how we at Market have been keeping up with it nonstop this entire time. So thanks a lot, everyone, for watching, and I hope to see you very soon.